Morning all. Welcome to the Scrutiny Performance Panel, Service Improvement, Regen and Finance. We have started recording just to let people know. The first item on the agenda is apologies for absence. We've had one from Councillor Mary Jones. Are there any other apologies?
Other apologies, Chair.
No other. Right, okay, thank you. Item 2 on the agenda is the disclosure of personal and prejudicial interest. Members? Are there any members? Somebody's waving. Mark? Councillor Mark Troy?
None from me, no.
Pardon? I don't read.
None from me. Thank you.
Okay. Any officers got any? No? Right, then let's move on to item 3 on the agenda is the prohibition of whip votes and declarations of party whips, which is the standard item on all scrutiny panels. If anybody has any instructions from the whips, we would like to know at this particular time. And just to remember that these panels are not meant to have any sort of whipped members on them from any political parties or independent groups. Before I move on to the minutes, can I welcome Councillor Andrew Williams, who has taken over the portfolio for performance monitoring and report, which is an item that's on the agenda, ably assisted by our colleague, Mr. Lee Wenham, a well-known supporter of the Cardiff City football team. But there we are. We'll now move on to item 4, which is the minutes of the previous meeting. Everybody happy with them? Okay, righto. Item 5 is the public questions. Are there any questions that have been asked?
We've had no public questions.
We have no public questions. Okay, we're rapidly going on here. Right. Item 6 is Q1 Revenue and Capital Budget Monitoring Report. Is the leader? The leader isn't with us at the moment, but I'm assured that he's going to join us. But we do have the Section 151 officer, namely Mr. Ben Smith, who is more than capable of giving us the issues within the report. Over to you, Ben.
Thank you, Chair. Morning, everyone. As you say, I am here. So in terms of my technical advice, whilst we wait for the leader, draw your attention to the table at the top of page 6 in terms of summating the directorate position at the first quarter. Some very obvious things to say. Usual areas of overspend in social services and place. That is a long established tradition, as you've seen in outturn reports, but you can see again, corporate services, finance and education living within means. So you've got a forecast net service over expenditure at first quarter for the whole year of just £3 million, markedly different from the position this time last year, where it was in the double digits. The structural action taken at council to invest into targeted areas has worked. And there's a further thing to note. Although this is ostensibly the first quarter, in the second quarter, the local government pay award was finally and fully settled. And so that was added to the forecasts for the year. And when I draw your attention to the contingency table, frankly, a £3 million overspend having not fully funded the in-year gap between a 2.5% assumed pay rise and a 3.2% pay rise, and the consequential increases on national insurance means I repeat the advice I gave at Cabinet, which is that is a definite no-score draw overall. I'm not minded to fund it in the current year, but will wait until the following year's base budget to address the pressures on pay gaps, national insurance final wash through, because as pay goes higher, national insurance goes higher, but it is also a triennial revaluation year for the pension fund, and I'm conscious that and confident the pension fund has done very, very well, and that will be considered in the round with all three. But at this point of the year, effectively that 3 million over, including pay awards gaps and fully covered by contingency, means that is something to be quite relatively impressed about, would be my officer advice. Others may differ, but that's my technical advice. In terms of section 19, the contingency fund, you'll be well aware we make a base provision every year to the contingency fund. 25-26, it was just over the £3 million mark. But more crucially, as you saw and discussed, we brought the outturn report here. We benefit from £80 million being carried over from the following year, giving £21 million available to the Cabinet and Council's disposal in the current year, which is a very healthy cushion, albeit it's mostly one-off money. I have frankly thrown the kitchen sink at the contingency fund in terms of things that are likely to happen or not happen. There has been discussion at Cabinet at outturn, and it was referenced again in Council last week, and the leader may wish to come further on that, and you may have questions as well around the proposals to establish an economic growth fund. But so at the moment that still sits within the contingency fund, and as I say, I've then thrown the absolute kitchen sink at everything I think could happen, might happen, possibly might happen, or some may never come to pass. I draw your attention particularly to the two entries around the holdbacks I had for pay, for the differential and national insurance, and you'll see quite clearly 1.85 million and 1.25 million, the 3.1 million effectively equaling that and score draw on the other side in the overspend position. It's got a usual arrangement of a small number of individual items that tend to crop up, but also some underwrites just in case we don't get grant funding from Welsh Government for some of the things that they might choose to fund. And history suggests that towards the end of the year, the Welsh Government does tend to give us extra dollops of cash for some of these items, and also potentially, albeit not guaranteed, for general inflation pressures, pay pressures, winter care pressures, etc., etc. So even having chucked the kitchen sink at it, I do not forecast that it is possible to expend the whole of the contingency fund in the current year. So that's a nice position to be in too. In section 28 and 29, I remind that there is a relatively smaller central contingent inflation provision. It was increased significantly during COVID, and then the energy spikes. It's been gradually reduced down as I've put more and more money back into services. At this point in time, only the apprentice levy, which is a statutory levy, is forecast to be needed to be called on that. Not a penny, yet again, very similar to previous years, is needed to be drawn from that central provision. So one to bear in mind. I have sprinkled throughout the report that although that's good news for the current year, there are pressures in services, and many of these things are one-off, and so it must be careful not to sound overly smug. But in terms of drawing it together in the revenue budget summary on services and core spending, you see quite clearly with that small service forecast overspend, the unspent balance on contingency having chucked the proverbial kitchen sink, not touched a penny of the available inflation balance, and my slight windfall as a result of the weirdness of the way the national insurance compensation works. The budget was set with 7 million versus our 7.1, and we get to keep the fire authority share because they don't get a direct funding allocation from Welsh Government. They do, of course, charge us through the levy in due course. Means that at this stage, I'm anticipating there is an underspend forecast already in any scenario for the whole year at first quarter. Quite a markedly different position from what you've seen in recent years. In section 38, my favourite, some of yours not favourite, yet again I draw attention to the fact we are likely to make a windfall gain in year as a result of elevated base rates and avoiding those sticky, horrible rising yields. And I'm estimating a minimum of £5 million underspend on capital financing, which in line with council policy is due at the moment to go into the capital equalisation reserve yet again, recycle the cash, use it to underpin some of the capital spending and defer the need to borrow. I'm sure there may be follow-up questions on that too. Capital budget in section 42, relatively low spend. That comes with mixed effect messages and views. I'm sure the committee will have concerns. I'm sure the leader will be disappointed at the level of overall spend being relatively low, but there are reasons given for it. You know what I'm like. I rub my hands with glee because that means more underspend, more cash not spent, more money to put into the capital financing, which ends up flowing through to capital equalisation reserve. It does tend to take off in second and third quarter, but there's clearly some work to be done there. Section 48, I've beefed up the housing revenue account. Although it's fully ring-fenced and looks after itself, there are some risks there. We've talked previously about the risks in terms of rent setting and the future sustainability, and I've explained why I've increased the overall level of reserves temporarily. But we've also had a pattern of revenue expenditure significantly overspent and having to offset it with the capital programme. So there is a need to look more carefully at the HRA this year, and that's been committed to and will be considered as part of the budget setting this year. It needs a more detailed dive. So that's in a nutshell with all the usual bells and whistles around it in terms of the risks and assumptions. Appendix A pulls it all together so you have it on a page. £3 million overspend by services as a whole, but that includes the extra pay award not quite expected, the offsetting amounts in apprentice levy contingency fund, the 5 million one-off windfall. I always say it's one-off. It is one-off. It's just how many years it's going to be one-off in terms of the interest charges. And yet again, it means the budget was set with an initial £14 million draw from reserves. At this stage, I'm already saying it can be more than halved to less than £6 million, significantly affected particularly by the underspend on net interest charges and the ability to add money back into the capital equalisation reserve. But there are other items, and again, you may wish to question me more about that on reserves, given the comments at council last week. And then you go into the appendices in terms of the detailed explanations from individual directors, which if there are anything that piques your interest, you may choose to do by follow-up letter to those directors. And there is the tracker, which indicates we're on target for about 86% of savings. Reasonable, perfectly reasonable in my view. It's very hard to achieve 100%, but at this early stage, I'm quite happy with that in terms of contributing to the overall position, which is very healthy. And then Appendix D, normal format, the big scheme spending of over 250k to identify what has been spent. So that's it from me in terms of technical advice. The recommendations are the same as usual format for Cabinet, but it is a good position to be in for first quarter. And as I say, I can see no circumstances at a technical level where the authority could not be in an underspend position at the end of the year already. That tends to be the case by the time we get to second or third quarter. I'm able to confidently declare it earlier, assuming nothing bonkers happens in the world. It always comes with that caveat, things that are not in my control, but I'm as confident as I can be in the current year. So that ends my technical advice, Chair.
Thank you, Ben. The leaders joined us. I wonder, leader, do you want to say anything at this present time?
Yeah, just briefly, Chair. I mean, again, Mr. Smith has captured it nicely. Apologies, I was stuck on my previous meeting, so I was a few minutes late joining. But you know, it is a remarkable position for those who've been through this process for many years. I've not seen a starting position of the year that's so healthy, outlining such a small variance from where we would expect to be. And as Mr. Smith alluded to, there were political decisions to significantly invest in services last year to basically re-baseline a number of the services base funding, and that has certainly helped in terms of where we are. There are some risks because we're in a unique position this year around Welsh Government being able to successfully get its budget through at the end of the year. So there are some things that we have to keep our eye on as we get towards the latter part of the year. But as Mr. Smith has said, there are also those one-off recurring items that continue to help us in terms of our local budget. But for me, very pleased to see this as the opening position, and I agree with Mr. Smith wholeheartedly. I would expect us to be in balance or better by the end of the year.
Thank you, Leader. Members, I have Councillor Peter Black as the first indicator.
Yeah, thank you, Chair. Just a couple of questions. The Economic Growth Fund, which is referred to in paragraph 19, it's not in the forward look as going to Cabinet at this stage. Do we have an idea of when exactly that will be going to Cabinet, and we'll be able to see the terms of reference around that? And then the second question, in relation to the housing revenue account, from reading through the section on this, it appears that this is due to an increase in day-to-day repairs. I'm just wondering, is that the case? Have we got to the bottom of what exactly is causing this very large overspend in the HRA, particularly concerning given the need to conserve balances in the HRA because of ongoing court action, I understand. So I'm just wondering, do we have more details of what's causing that overspend? Thank you, Chair.
Chair, do you want me to take the first bit? Mr. Smith may want to add a little bit of technical context around the HRA. In terms of I assume, Councillor Black, you're referring to the Local Growth Fund, the £10 million that's referenced?
It's referred to as an economic growth fund, but yeah, that's what you say. That's what it's called. You want to call it.
Yeah. So, following the discussion we had at Council on Thursday, I've given a commitment that we'll bring it via Cabinet to Council for discussion. I've said that would be the case. I would expect that to come through probably next month, if we can get there. One of the things that we've been waiting for clarity on is what the successor to SPF looks like around the UK. And of course, what we wanted to do to make sure that we aligned our local resources as best we can with what is happening nationally and in Wales. There is still an element of uncertainty around the split between capital and revenue for the replacement funds. So again, Mr. Smith and I wanted to make sure that we had full sight of that before we then shared the detail around our local growth fund. But you should expect that in the next cycle, depending on obviously UK government meeting their timescales, I think, of publishing their criteria in the next couple of weeks. In terms of HRA, I'll hand that over to Mr. Smith.
Okay.
Thank you, Leader.
Ben.
Yes, I mean, in one sense, the level of overspend is a little warmer than it has been for the last couple of years, but it has actually been pretty much significantly over to the tune of millions for a number of years. There seems to have been a significant amount of pent-up demand post-COVID. That doesn't seem to have quite abated. We are taking advice and doing a deep dive in to see what else there is that can be done around it. For the last couple of years, effectively, I've used slippage on the capital programme and had to make some decisions to give advice to you to throttle back on the capital programme a little bit to balance off the day-to-day revenue maintenance spend. You're right, that has become exacerbated because of the further advice I gave in terms of risks around rent levels, and that's why I wouldn't allow a draw from reserves in the current year of any material note, sorry, the year just gone, and an add to reserves. The court case, the latest hearing has occurred. There is obviously opportunity for plaintiffs to consider appeals and all sorts of other matters, so I will again speak rather circumspectly because it's not over to the proverbial sings. But that court case has predominantly been resolved in terms of the initial stuff in favour of the registered social landlords, which would also mean it is in favour of ourselves, subject to, but that would mean I would materially be relieved of the potential theoretical risk, as would the other 10 HRA dwelling stock authorities, and you can therefore expect in due course, assuming that there are no further challenges or bits in the way, that limitation will be removed, I would hope, in its entirety, but certainly in its majority, and that would free up the flexibility in the short term to continue me to be able to flip between supporting capital and revenue. It's because the large part of the HRA capital programme is supported by revenue contributions from revenue, and that's the only reason I'm able to do the flipperoo, as you'll be well aware, Councillor Black. But it does at the moment look very, very encouraging that this sort of temporary blip for a couple of years, which has then highlighted the scale of the disparity, is likely to be very beneficially resolved. But there is still that additional piece of work, because it's not acceptable to me nor to members for it to continue to be that far adrift without some real deep dive in drilling into what it is and then ultimately what the recovery plan is. Because ultimately, if it continues to persist on revenue, given the Welsh Government's plans around the limitations on future rent increases, the only place I can fund it from, if my income is capped, is effectively by reducing the aspirations on the capital programme, which no one wants to do. So it's certainly an interesting time and an apposite question at this point in time. But at the moment, I am much happy. I was fairly chilled before in terms of there were theoretical risks. I'm in a much happier position at the moment on the matter. But I trust you'll understand, Councillor Black, while I won't fully explain the whole lot, given it's still subject to potentially some further legal proceedings. But the initial mood of music is very, very encouraging for all of the 11 housing authorities.
Thank you. I assume that restricting capital programme would have an impact on day-to-day repairs as well. So, in a sense,
exactly,
it's sort of
yeah,
not very nice
chicken and
circle,
egg,
isn't it? Yeah. Thank you.
Okay. Councillor David Jenkins, Jenkins.
Yeah, thank you, Chair. My question is on that HRA as well, and it mentions that overarching management actions at the macro level in paragraph number 51 there. Can you tell me a little bit more what that looks like if that was implemented? And it says also what commissioned internal work would be impacted if it continued to go in the wrong direction, that budget.
So the macro level, effectively, I've already answered. Apologies for it being so vague in wording in the report, but it's as I've just set out in the answer to Councillor Black. So effectively, to balance it at a whole to the millions, I've had to potentially throttle back on revenue contributions to capital, mostly through slippage, but certainly for 25-26 budget setting and for 24-25 out, and I had to turn the screw more than I would have liked and members would have liked, just to protect us on the potential rent issue. Clearly, not commissioning work internally could have a knock-on impact on building services, but the overall quantum of spend on the HRA isn't in itself affected. It's been that ability to pivot between revenue and capital, because the vast majority of capital has been funded from revenue from within the HRA. It's that reduces the risk, and that's what the macro reference is referring to, Councillor Jenkins. It's effectively what I've just described as to how I've managed it for the millions and left housing to get on with the individual jobs and the projects. It is one that we'd want to be resolved, because there are potential spillover effects if it couldn't be permanently resolved and reduced back to a manageable level for internally commissioned work. So you're right to ask the question, but that might be one for follow-up with housing colleagues in terms of, and building services colleagues in terms of the practical implications of it. But I consider the macro stuff explained by the previous answer, and I hope you'll accept it on that basis.
Thank you.
Okay, next one is Councillor Williams.
Thank you, Chairman. Just a quick query. I did query the other day in terms of the HRA, why the maintenance costs are so high, when we spent a considerable, huge amount of capital expenditure recently to meet the Welsh housing quality standards. I haven't had an answer to that, and I'd be interested to know why. It would imply basically that the standard of work when that capital expenditure was being carried out was not as high as it should have been, because he would anticipate, after high capital expenditure, low maintenance costs for the time, which would then slowly increase thereafter. Thank you.
Can I suggest the answer to this question that we write directly to the Housing Department for an answer for that, Councillor Paxton Williams, because I don't think Ben, even as good as he is, can answer that particular question. And I think it would be more appropriate if we wrote to Housing and asked them for a detailed explanation to come back to this scrutiny panel, if that's okay.
Yeah, I think that's a sensible arrangement, Chairman. Thank you.
Okay, Ben, we'll do that. Councillor Jeff Jones.
Yeah, thanks, Chair. Yeah, it's page 1138. Just clarification, really. It mentions the, the £5 million minimum under spend on capital finance and charges at the top. But further down, it actually says, it mentions whether our lenders call any of our lender option, borrow option loans, and how far and how fast base rates fall. What exactly does that mean? Surely we've got static rates that we actually borrow on now, or could they change? Can you just clarify, please?
Do you want me to go first, leader, and do the technicals, and you do the politicals?
Yeah,
or do you want to go first?
like,
I think the political answer would be better first.
Yes,
and
apologies.
then-
I'll defer and allow you go first. I didn't. Yeah.
and Ben, I'm sure you'll correct me
Leader?
if I get it wrong. In terms of Councillor Jones's question, I think this is the one we've debated a couple of times in the chamber again. So there were some loans taken out previously that were, I think, as Mr. Smith has described, the lowest or cheapest option at the time. But they came with conditions whereby the lender could vary the rates, which meant that you had legacy risks attached to those loans. And as Mr. Smith has said, so if the lender comes to us where we've got historic borrowing and they say, we now want to raise your rate to X%, Mr. Smith has said he will use our firepower to basically say, no, thank you very much. We'll not exercise that option and we'll close the loan down. And that's what Mr. Smith has done as a strategy, is to use our ability where we have it to not be pressed into accepting higher rate loans of the type that you've outlined there. So what the section says is that Mr. Smith's best assessment, I think, at this point in time is that we are looking for some additionality again this year. But of course, as Mr. Smith said many times, interest rates have been a little bit more sticky than we had anticipated. That in one sense is good because it means that we see higher returns for longer on the money that we are lending out, and therefore we have a better return towards our finances. So if rates come down remarkably quicker than we think, then obviously the return will be less. But if they stay high, then obviously the returns will remain higher for longer. So all of that together means that Mr. Smith is able to avoid taking out new higher cost borrowing when he doesn't have to. And we are not forced to accept higher interest rates on loans that were taken out 15 or 20 years ago. So that's the position, Councillor Jones. Mr. Smith, I don't know whether you want to add to that. I hopefully covered it okay.
You've covered it eloquently, Leader, and I'm sure members probably better understood it than me giving one of my technical whiz-head definitions. But yeah, just to reassure, all of our PWLB borrowing is totally fixed, banked. All of our short-term deposit interest is fully variable. So as the Leader has said, with sticky short-term rates, that's a win. The fact that we haven't had to go out and borrow is a win. That bit in the middle, those lender option borrower options, were a number of commercial loans taken out in earlier years where they were cheaper than PWLB. But the lender option borrower option is the lender has the right every now and then to set the rate as they see fit, and the borrower has the right to accept it or walk away. And to paraphrase it, in reality, if you have a LOBO at 4% and it comes up for renewal, a lender is going to turn around and say, I want 6 today because that's the market rate, knowing that we'd have to borrow otherwise from the PWLB at more than 6. It's a commercial decision for them. But as the Leader says, because I'm cash rich, every single LOBO that has been called, and several have, I have just said I will exercise my borrower option to just repay in full at no penalty, walk away, draw down on surplus cash balances. But of course that redeems at each time £20 million worth of loans, and at some point I do have to then externalise it at a prevailing PWLB rate. So I'm still using that wait and see option. Some authorities did not have the cash balances we've had and have had little option to either renew their LOBOs or take interest rates from the PWLB at very, very expensive rates. And that's the bit that's dodged. I can't control when the LOBOs are called. When they are, they tend to be about £20 million a time. 2 were called in the last year, which is why I've referenced it additionally this year. No others at the moment look to have been called, but for the avoidance of doubt, behind the scenes, if a LOBO is called, unless it's at a fantastic rate, and as I mentioned in council, it wasn't a LOBO, it was one of the other commercial loans where I was able to do a swap for a new loan at 2.something% against PWLB of 6%. It was a no-brainer. I will likely always take that option and draw down cash. It's a luxurious position to be in, but that's the only thing I wanted to give as a further exemplar for it. But the Leader more than adequately answered. As I said, probably understood. You probably understood it more than my attempt at my whiz-bang chicanery, as the chair often says. I can. You didn't need my Harry Potter explanation.
Okay, Jeff.
Thank you. Yeah, a lot clearer actually. Thank you.
Okay. Are there any other members who wish to ask questions? No. The only thing I'd like, and I did ask this in council, and he did confirm it then, and that is that we have a cash reserve, a clear cash reserve of an excess of around about 30 million, and out of that we are going to take this economic growth fund of about 10 million, and I understand what the Leader said about being capital revenue, and how that is going to be, and I suppose that will be the report that will be coming to Cabinet. Am I assuming that is correct? It's how that capital and revenue is going to be split in that 10 million, or is it going to be just capital with a revenue indication within that?
That's up for debate, but it can still be both, is my view. At a technical level, it's a revenue reserve, so it can be used for both, but I'll defer to the Leader.
Right, okay. Okay, thank you.
Thank you, Chair. Yeah, I would, my preference is to keep the fund as flexible as possible to give members the most discretion possible in terms of things they may want to access from that fund. The part that has caused Just a cautionary note from us has been the fact that we know UK government are changing other funds like shared prosperity and the flip between capital and revenue. So again, we just wanted to see what the impacts of that are before we define our local fund properly. But the aim will be, as it has been with previous funds, to make it as flexible as possible for us to use locally.
Okay, thank you. If there's no other questions, can I thank you, both Ben and you, Leader, for attending the meeting and the explanations going forth. Thank you.
Thank you, Chair.
Moving on to item 7 on the agenda, and that's the performance monitoring report. I did explain to Councillor Andrew Williams that because of the very nature of what these reports are, this is a general overview of our performance as a council. And because it's in there is specific items, say social services or education or maybe transport or whatever that may, the cabinet member may not have the responsibility for that particular part of the council services. And as a result, we normally would write to that particular department and ask for an explanation of that particular indicator. Now, there is and I will ask Mr. Lee Wenham to explain that there's a different format to the report that we've got here today that we've had in the past, but it's an explanation that if we have questions specifically about any individual department, we'll be writing to them. And I will hand over to Lee or Andrew to give an explanation, and then I will ask Lee to go through the various issues as they come up. Thank you.
Good morning. Thanks, Chair, and thanks to the committee for inviting me along to today's meeting. As a new cabinet member, I'm hoping to build on the work of Councillor David Hopkins. I'm looking forward to working with the committee in the coming months. Hopefully, it will only be for a 6-month period, all being well. So today we're considering the first quarter's performance monitoring report. I'm pleased to say Q1 marks a strong start to the year with good progress across all 6 of our corporate plan wellbeing objectives. The majority of our delivery steps, success measures and performance indicators remain on track, despite the Council's ongoing financial and operational pressures. The report shows the Council continues to use its resources effectively, and we have demonstrated a commitment to transparency, continuous improvement, and the outcomes for residents. I'm going to hand you over to Lee now, who's the head of service, who will give further details on our performance, strategic risks, and areas for improvement. Thanks, Chair.
Thank you. Members may be aware that the report has changed in format for this quarter. We've introduced some changes we hope improve the look and feel of the report. I think previously the report kind of meandered through various issues. What we've tried to do in the new look report is to focus on each of the 6 wellbeing objectives and to look at them each in turn and to provide an overview and some analysis of where we are with each of the 6. In terms of the broad brush of where we are, 71% of our steps are on track, 84% of our success measures, and 50% of our performance indicators, with a further 20% within that 5% range of hitting targets. So we're in a good position, more work to do. With the new style report, what we've tried to do is look at each of the 6 objectives, looking at where there's strong performance, where are the areas for improvement, and what the focus should be for the next quarter. So hopefully members will find that easier to follow, but also to pick out the key highlights and areas that you need to focus on. I'll just quickly run through each of the 6 and give a very broad brush. So in terms of safeguarding people from harm, the transformation of adult and children's services is progressing, and we've seen hospital discharges reduce in terms of time. One of the issues we need to keep an eye on, obviously, is workforce capacity and resilience. That remains a key issue, and that has been for a number of years, and that's still kind of one of our red risks. In terms of improving education and skills, attendance and behaviour are improving and exclusions are down. We've also seen that all Estin reports are reporting good quality of teaching and learning. On the kind of not so good side, Welsh medium uptake is below where we need it to be and want it to be. And there's also some challenges around literacy and numeracy. Moving on to the third one, transforming our economy and infrastructure. Most of our business grants, nearly all of them, have been fully allocated. Major events throughout the summer have provided a boost to the economy, things like the air show, and our city centre projects are progressing well. There are some risks around costs and timings related to those projects when we work with contractors, and kind of macroeconomic issues affect them. We're also aware of compliance issues around the housing quality standard, and that remains an area for focus. Tackling poverty, enabling communities. Again, good progress with over £500,000 in grants being distributed, and the return of the free bus scheme in the summer proved to be really successful. We've also helped 670 people into work, which is above our target. In terms of kind of risks and issues to keep an eye on, it's around housing, supply and temporary accommodation. The committee will be aware that that's been highlighted in previous quarters in the recent years, so you'll be aware of the kind of issues that we face there. Nature recovery and climate change. There's good things happening on the ground. Things like the LED street lighting now is almost complete and doing retrofits. The local nature recovery action plan is progressing, but net zero is still flashing as a red risk. And I think all councils in Wales and across the UK are struggling with reaching targets set by governments. And finally, the transformation and financial resilience wellbeing objective. You heard from Mr. Smith and the leader earlier. Our medium-term financial plan is on track. Our digital transformation is producing benefits now, and also we've managed to move forward with our workforce and organisation development. Pleasingly as well, we've seen that the annual governance statement, as said, we have robust governance in place, which will reassure members that we work in, the checks and balances are what they should be and are effective. In terms of things, again, we need to keep an eye on and be aware of. Sickness absence is always a recurring issue in local government, and keeping an eye on delivering our financial savings. But again, you heard more extensively from Mr. Smith on that. In terms of the risks, 71 of them have remained static. 19 have increased their score and 10 have decreased. And the kind of red rated risks that we have at the minute is around safeguarding, homelessness and temporary accommodation. And then finally, priorities where we want to see some continued improvement. That would be around safeguarding and workforce resilience in social services in particular. Welsh medium growth, going back to that issue where uptake is below target, and focus on numeracy and literacy. Our major regen projects need to be delivered, and also the housing quality standard is something we just need to ensure is being delivered as best possible. We're doing everything we can to reduce our reliance on bed and breakfast, and there'll be some good news soon with the opening of Cleese Glass and some other kind of initiatives, but that's one which is a challenge for us and other councils in Wales. Reducing carbon remains a critical risk for us, and net zero. And finally, delivering savings and sickness absence are areas which we'll have that continued focus on as well. That's a very broad overview, Chair. I hope members find the new report style a lot more helpful and informative than previous iterations. Thank you.
Thank you, Lee. I think it is. It does make reading it a lot easier. I have a couple of questions. Councillor Peter Black.
Yeah, thank you. I mean, I've actually got some technical questions about the format, which I'm struggling with, to be honest. There's no key or context to some of the things here. So, for example, the strategic issues have a score, a number against them, but there's no indication as to what that number relates to, or whether it's good or bad. So that's one thing. I'm also I know about green, amber, and red. What does blue mean? And then the other thing is a good example is on page 61 of the report, or 96 of the agenda, where you've got the performance there. You've got various symbols in the colours. What do those symbols mean? I think a key and some context would be very helpful. Thank you, Chair.
That's a fair comment. Yeah, I think that's a fair comment. It's out to the 100%, obviously, but you know what the colours mean.
Is it actually obvious? Is it obvious at all? I don't think it is.
Yeah, well, it does percentage. We've got the percentage figure
No,
alongside
no,
it.
no, not those figure numbers. Under the strategic issues, I just page 62, 25, 15, 20. Is that a percentage? For cyber data and digital security, 25% of what?
Hang on a minute. What page did you say that was?
Well, just example, page 62, page 97 of the agenda. Cyber data, 25, 15, 20. Is that a percentage? It's all through the report like that.
Okay, hang on.
What do these numbers mean?
Let's find out where that is first.
Yeah, well, it's not just that one. It's all through the report. Strategic risks on page page 88, 12, 12, 12.
Hang on, these are in the appendix, are they?
Yeah, I'm looking at the appendix. Yeah.
Jake, shall I come back to
Yes.
Councillor Black? I'll
Yeah.
provide you with some answers, Councillor Black.
I can't hear you. Sorry, you need your microphone on.
Sorry, Councillor Black, my mic was off. I'll come back to you with answers on those particular points, and I'll make them available to Rachel as well for the committee to have the information.
Do we know what blue means?
I think they are a legacy of what. Yeah. All right. Okay. Well,
Sorry,
thank you, Peter.
What does the blue? Do we know what the blue means? Is that an easy answer?
Blue usually means delivered, Councillor Black.
Delivered. Okay, thank
Yeah.
you. That's again, it's not in the key. It's no key. So, yeah. And what on the symbols? Do we know what they are? Or are you going to have to come back on that as well?
I'll come back to you on that as well.
Okay, thank you.
Okay, hang on a second. Numbers.
Sorry, Councillor Black. I think with the symbols in the right-hand column where it's performance, the star and the circle, they're also color coded. So the star is green and the circle is amber.
And the triangle is red.
Yeah.
So that relates. So do you need the symbols as well as the color? It just indicate. It seems to indicate to me something different.
Okay, I take on board your point.
Back to what Richard Rowland used to hear is a separate system, and I don't know how it's come onto this, but I think you are all right, Peter. There needs to be the RAG system needs to incorporate the blue as well. Okay, all right. Okay, fair question. Di Jenkins, Councillor Di Jenkins.
Yeah, thank you, Chair, and thank you, Lee, for this report. I just got 3 questions or observations which you may or may not be able to answer, and happy for you to take them away, as the Chair says, okay, for other people to answer in the departments themselves, if you can't. So on page 27, number point 11, you say progress in reducing the number of children in external residential or foster care remains slow. I'd like to know more of the reasons that are inhibiting that progress. I can see that it mentions you're going to accelerate plans to reduce reliance on external placement, and that some houses are going to be purchased. I'm just wondering if there was other plans as well to accelerate those. That's the first one. Page 28, I wanted to know what are the top 2 challenges in growing Welsh media medication. And the last one is on the corporate plan. It's Castle Gardens, right? They're in green there. Now, I'm fortunate enough to work right by Castle Gardens in the BT Tower. I'm looking down on them, and just a little tiny bit concerned that I haven't seen any progress in work there the last 3 months. So just a question of whether that's just normal, nothing to worry about there. That's all. That's me, Chair.
Okay, right on. We'll do leader. Do you want answers? Well, obviously the question on Castle Gardens, I would have thought.
Yeah, I'll come in on that one if that's okay, Chair. Just to assure Councillor Jenkins, there are a number of site inspections and underground works inspections that have needed to take place by the developer as part of the setting up of the compound and enabling works. I believe they're on site at the present time, looking at the deconstruction of the existing pond area and waterfall area. and in the next few weeks you should see the larger equipment then moving on to site for the reconstruction works to begin. So there are some works that needed to take place that won't have shown for those looking in a huge amount of physical deconstruction or demolition taking place, but that we are now getting to that phase, and Councillor Jenkins, I'm sure from his vantage point, will see a lot of construction taking place in the coming weeks.
Fantastic. Thank you. Thank you.
Thank you, Leader. Okay, Councillor Paxton Hood-Williams.
Thank you, Chairman. Just in response to one of the points that Councillor Jenkins raised, basically the council is struggling to a certain extent in terms of finding alternative mechanisms of certainly putting up children in particular where residential care is needed because of the Welsh Government requirement to move as quickly as possible to ensuring that they're not using independent companies to avoid those companies making profits out of the fact that children need support. However, it does take time to replace and to install residential buildings particularly, and we're in the process, or the council is in the process of looking for those as fast as it can, and that's one of the main reasons at this point in time why we are seeing problems in that area. We're well aware of it within Scrutiny. The department is well aware of it in Scrutiny as well, is well aware of it. So it is being worked on to try and minimise the problems that are arising from that policy from Welsh Government and the timescales of it. It'd be a lot better if there was a bit of a reduction in the timescales required to meet those targets.
Thank you, Paxton. And as you know, Paxton is the chair of the Children's Scrutiny Board. I don't know if that is sufficient for you, David. And as such, I don't think we'll write to him and ask him, because we've had an explanation from the man who chairs that panel. Is that okay?
Thank you. That's fantastic. Thank you very much.
Thank you, Councillor Susan Jones.
Thank you, Chair. Knowing that safeguarding is such an important issue, concern regarding the number of percentage of council staff that have done training, 62.97% out of 100, which seems quite low. How are we going to address this?
I think that's a question we will have to ask the department, and generally speaking, we will have to ask what's happening with in the training department as well, and see what the uptake has been. So I don't necessarily think that Lee or Andrew could answer that question this morning, but we'll try and find out who we can get to answer that question.
The only thing I would add to that, Leader, is obviously this was the first quarter, so that number will have risen as members of staff would have done the online training. So I can get the most up-to-date figure. Head of HR, Rachel, will be able to provide information on what we do, but that figure will have risen in the subsequent months since June.
Okay. We'll get some figures for you, Sue, and give it to all the committee.
Okay, thank you so much.
The whole panel. Okay. Are there any further questions for either cabinet member or health service? If not, can I, on behalf of the panel, thank you both for coming, and more than welcome to stay if you want to, but I don't think you will. But you're more than welcome. But thank you again once for coming. The next item on the agenda is the work plan, which is on. Are there any questions or comments about the work plan? I did first. Okay, if there's no issues about the work plan, which is the next meeting is in November, and it's the review of revenue reserves. Not sure whether we need to do that considering what we've done today. and the tourism destination management plan update. I think that's very important that we need to have a look at that, seeing as that we need the tourism is such a huge part of the economy of Swansea. So that's on the 4th of November, and then in December we've got the budget, and again in January. That takes us up to January. Are there any questions on this work plan? If not, can I thank you all for this morning, and have a good rest of the day. Thank you very much for your attendance.
Bye-bye.